The trend-based Fibonacci time zone takes concepts from the Fibonacci extension and applies them to the x-axis of time. That means most of the influence on the interval lines will be from the duration of the base trend. The main difference to other Fibonacci techniques is the default proportions only go up to 3 and only include the numbers ending with 0.382, 0.618, and whole numbers like 1, 2, and 3. There is the option to select 0.5, but this is almost never used. These Fibonacci proportions divide the duration of the base trend into sections that are close to 1/3 and 2/3 the length of the base trend's duration. Trends often have 3 distinct phases. They start, pause, and continue, then end. These 3 phases can divide the trend into 3 main sections. They also don't necessarily happen at exactly 1/3 increments and often get close to increments of 0.382 and 0.618, the duration of the base trend. Naturally, a short base trend is not usually useful since it produces interval lines that are too close together. Once interval 3 is passed, it is necessary to expand the intervals by expanding the base trend or by starting a new trend-based Fibonacci time zone. The base trend is normally a distinct trend with a clear reversal, and point 3 is normally placed at the start of the first retracement to the new trend. On this chart, the base trend is a clear uptrend, and point 3 is placed at the first upswing, forming the first retracement in the new downtrend. In the case of a continuation, point 3 is normally placed at the end of the retracement of the established trend. The trend-based Fibonacci time zone combines aspects of other time analysis methods in that it has equal increments of the base trend for the initial interval with the interval lines 1, 2, and 3. These equal increments can cover longer durations, while the intervals ending in 0.382 and 0.618 can capture smaller short-term features. The trend-based Fibonacci time zone can also have the interval lines applied even after there have been various trend reversals and retracements. However, the intervals are often most effective for the first trend the intervals are meant to cover. Intervals can also be used to identify the approximate times of continuations. In this case, for the uptrend that has a moderate reversal in 2016, which actually became a retracement in a larger uptrend, stages of a chart pattern, such as this ascending triangle, will also usually be covered to some extent by the interval lines. After a major shift in a trend, it can be useful to start a new trend-based Fibonacci time zone. The final interval being 3 is not usually a problem, since time analysis normally begins to lose effectiveness after that. And there can normally be a new base trend used for a new trend-based Fibonacci time zone. Switching to a shorter time frame, like the daily chart, also helps with smaller features and short-term developments, while longer time frames, like the weekly charts, are useful for focusing on larger, longer-term features.